This is another stock that came on my radar yesterday when I applied the filters. This stock, PFS, PTC India Financial Services, this came in my radar list, but I chose to reject this stock. And in this video, I want to discuss why I chose to reject this stock. Now, you look at this base. Before we go to Market Smith and look at the parameters of this stock, you look at this base, okay, very large base. That itself is a big negative. Okay, if I measure the height of this base, how much has the stock lost from the peak? That's what we want to see. See, it's lost 52%. You remember I had made one video in which I spoke about the grades of bases. So if the stock loses 10% from the top, that's a A grade base. If the stock loses 10 to 20% from the top, that's a B grade base. If the stock loses 20 to 30% from the top, that's a C grade base. And if the stock loses 30 to 40% from the top, that's a D grade base. Here you have 52% crash. That itself is a big negative, number one. Number two, yes, the stock steadily rises up. It forms a proper base point, proper buy point here. So the high of this candle is 62.30. That is creating a buy point, which is in the green zone. So if we measure, if I draw the base for you, it looks like this. It's 0.1, 0.2, 0.3, 0.4. Yeah, 0.4. This is today's candle. Okay. Currently, the market is live. As you can see, this is 12:50. Market is live. So you can ignore this candle. So there are 4 points in the base, minimum 2 contractions in the base, which is what we are looking for. We are also looking for minimum 10 candles in the base. Here you have comfortably more than 10 candles because it's been months. It's since the beginning of the year, the stock has been consolidating, plus the moving averages, the blue, green, red, the 50-day moving average is above the 150-day and the 150 days above the 200 days. So it's a uptrending stage 2 stock. That all is fine. But you look at the distance between the closing price of yesterday to this yellow line, it is more than 5%. I prefer this distance to be less than 5%. The closer the stock is to the yellow line, the better it is. Because if, let's say, the stock goes up 10% today, okay, as the market is live, the stock goes up 10% and you buy at the yellow line, how much will you make? You will end up making only 3% because it took 7% for the stock just to reach your buy point. So you, although the stock made 10%, but you made only 3%. That is what I don't like about the stock. That's another reason why I rejected. So just looking at the base itself, I am rejecting the stock. Plus, you see volatility, very, very large candles. In some candles, there are very large shadows, especially upper shadows. Okay. I don't mind the lower shadows because lower shadows represent bullishness, upper shadows represent bearishness. So I don't mind the lower shadows, but you see high volume, very long upper shadow, that's a sign of bearishness. Very tall candles, okay, not a good sign. And the stock is wedging up, the stock is not consolidating on the right side. What I want to see ideally in such stocks is like this: number one, this is number two, then three, four, five, six, seven, eight, nine, 10. This is the kind of movement that I like to see, or maybe some cup with handle, like a nice cup formation and then a handle formation. If that is the case, then I might be interested in the stock. Plus, this distance from point 1 to point 2 should be less than 40% at least. This is beyond 40%. So there is no question of buying this stock. Next, here itself, see, I have rejected the stock. I don't even want to go to the Market Smith. But if you look at Market Smith, you will understand why the stock is behaving the way it is behaving. So let's go to PFS, this one. Let me open up the numbers for you so that you get a perspective. Yeah, I go to the daily chart and we go to consolidated here. Now see, here if you see the same chart, the base looks tight. The relative strength line seems to be rising, which is good, which means the stock is doing better than the Nifty 50. That's a positive point. However, you come down to earnings and sales. Negative sales growth 1, 2, 3, 4, 5, 6, 7, 8. You want to see more? I think you can see more. Yeah. See 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Out of past 16 quarters, okay, 16 quarters means 4 years. Out of past 16 quarters, there is only one positive quarter. Will you buy this company? Okay. Then earnings are very erratic. Sometimes you have earnings growth, sometimes you have earnings decline, and not just 3 or 4% decline. This is 61% decline. This is not consistent. Okay. Negative, very, very negative point. So there is no question of holding this stock for the long term. Okay. This is not a positional trade. If at all I have to take a trade in this, it is going to be a swing trade. That is very clear from the numbers itself. It has no sales, no earnings. The fundamentals are completely out of place here. That is why you see the master score is poor. It is 51. Master score basically combines the technical and fundamental factors, and the rating is from 0 to 99. So I prefer this number to be more than 80, 80. But it's 51 is very poor. EPS rating is very understandable. It is 45. I prefer this to be more than 80. For the best stocks, it is more than 90. Price strength is fine. It is showing price strength. I don't know why the stock is going up. Maybe because of some government announcement or something good happening in the sector. I don't know why the stock is going up. Maybe people believe that the stock will recover, the sector will recover. Maybe regulations are good for the company. I have no idea. Okay. But the relative strength line seems to be rising. The price strength seems to be rising. But still, 20% of the stocks in the Indian stock market are still doing better than this stock. 20% of 5,000 stocks is 1,000, right? So there are 1,000 stocks doing better than this stock in terms of price performance. And don't ask me about earnings performance. I have just shown you the sales and the earnings of the stock. So there is no question of putting money here. Okay, group rank is 40. So till like 2, 3 days ago, the stock was not even in my radar because the group rank was more than 40. It has just entered my radar, which means I have to give it more time. I prefer this number to be 20 or less than 20. Accumulation distribution rating is okay. Institutions seem to be buying the stock. You can see from the volume. Okay, that's fine. EPS growth rate. This is the 5-year EPS growth rate compounded basis. Actually, this EPS growth rate is made up of 4 different factors, which I will discuss in some other video. But overall, this is the 5-year EPS growth rate. Not impressive at all. PE ratio is low. It is not a PE ratio which represents a normal growth stock. Growth stocks have a very high PE ratio. Okay. Return on equity is poor in single digits. We want return on equity to be at least 17%. That is considered very good. Management ownership is good. Okay. Is more than 50%. Not many funds are holding on to the stock. Generally, this number is 100 or even in thousands in some cases. But here only 62 funds are holding on to the stock. Not very encouraging. So if you listen to me talk about this stock, there are more negatives than there are positives. Okay. So if while you are discussing the story of the stock, when you are looking at all these numbers, when you look at all these charts, your body will tell you whether you should buy the stock or not. There is a difference between your body and your brain. Your brain works on logic, but your body works on feel and intuition. Your brain might do analysis on the chart, but your body will tell you it's not worth putting money in the stock because you are not getting that feel. Your brain is very rational and logical and analytical, but your body is, listen to your body. Your body is telling you don't get involved in this. If you looked at 1,000 charts, okay, your brain will look at the parameters, the numbers, okay, the factors. But when you look at 1,000 charts, your body will begin to memorize. The body has a memory. Your body will begin to memorize which were the stocks that looked like this and did they do well. And you will realize that such stocks have not done well in the past because they have no fundamentals in place, not much industry strength, not much institutional demand, poor rankings, poor base formation, very steep correction in the base. When the market was flat, see, when the market was rising, the stock was falling. That's a poor relative strength. See, the relative strength is falling like crazy. Okay. Plus, it's a small cap stock, like only 3,000 crore market capitalization. Is very, very risky place we are getting into here. It's a non-banking financial company, so maybe they have non-performing assets. Who knows? If I click on the weekly, let's see the what the stock has done. See, if we look at the weekly, they show the base here. So if I click here, that's the first, that's the cup with handle. So it was at 17 rupees. Now it is at 60 rupees. So the stock has already gone up 3 times. In what? When was this? This was in 2023 May. So roughly in 1 year, the stock is up 200%. Remember, the stock is up 200% in close to 1 year without fundamentals. What does that mean? It means there is more volatility ahead. It means the stock might crash. It means if then the market comes down, the stock might come down very hard. I don't know what is going to happen in the future. The stock might double from here without fundamentals. Maybe some news, maybe some regulatory change or whatever. I have no idea. I don't know what this company does aside from the fact that it's a non-banking financial company. But currently, looking at the facts, I'm not looking at opinions. I'm not looking at future predictions. I am just looking at the facts right now. If there are other stocks which fare well in terms of all the parameters that I am discussing here, why should I risk my money on this stock? There are other stocks where I can have a better probability of success. So you understand, when I speak about a stock, when I show you the chart, when I show you the trading view chart, when I show you the market smith daily and weekly chart, we are looking at bar chart, we are looking at candle chart, we are looking at price volume, we are looking at earnings and sales, return on equity, the rankings, earnings ranking, price ranking, industry strength, institutional demand, management ownership. These are the things that we need to look for overall before we buy a stock. And once we buy a stock and it begins to move, okay, then we can get a little bit more interested in the company. Like, why is the stock price going up? What change has happened that makes this price go up in spite of 15 quarters of declining earnings? Why would the stock shoot up 3 times when you have 15 quarters of declining earnings? I have no idea. Okay. So this requires more investigation. Okay. But I would spend time investigating a stock in which I already have a position. Why should I spend time trying to investigate a stock in which I don't have a position? Okay. So when I buy a stock, two things can happen. Either it will come down, hit my stop loss, or I might cut the position before even it hits my stop loss, or it might start to go up. And when it goes up, like in 1 or 2 weeks, if it goes up double digit return, 10%, 12%, 15, 20% in 1 or 2 weeks, then I would be interested. Then I would want to see what's going on. What's the story of this company? What's happening here? Why is the stock going up so rapidly? Although I have bought it at the right price, at the right base, but there are some fundamental factors at play. Why are institutions piling onto the stock? These are the things I will look at only when I have at least some position in the stock. But this, unless it this stock creates the scenario where I would be interested in buying the stock. I'm not digging deeper into the fundamentals because there are 100 stocks on my radar list. Why would I waste my time looking at the business model of each company? Why not look at the best ones? Okay. Even if I buy just one or two stocks a week, that is enough. I don't need to buy a stock every single day. Okay. In this stock, I might take a swing trading position, but that is also very, very unlikely because the base, the height of the base itself is more than 40%. If a stock corrects 50%, that significantly reduces my confidence in the stock. So chances are I might not buy this stock no matter what happens in the future. Let's see how the base develops towards the right. I might take a 2%, 2.5% position if it really forms a very tight base. When it forms that tight base, then I might just do some Google search. I might look at what's been going on with the company very recently in the recent quarter. Is there any news release? Have they got some, some big order, or some assets are off their books, or something has happened. Otherwise, the stock has not would not have gone up 3 times in 1 year. Okay, with 15 quarters of declining sales. Okay, so that is my take on this stock. I'm not buying. Okay, I'm not buying. There are other stocks which look more interesting. And by the way, I have bought some stocks recently which I am not discussing with you right now because that would be like, recommendation or something like that. But so when I buy a stock, I would let 1 or 2 weeks pass, after which I will make a video on the stock, because I want the stock to, uh, start do either it comes down to the stop loss, hits my stop loss, then I can make a video and share with you the entire story, which I have done previously. Or if it starts to go up, let 1 or 2 weeks pass, and then I will show you what was I thinking, what were these parameters before I bought the stock. So I have documented, whenever I buy a stock, I document on that trading view page what were these parameters before I made my purchase. That's very important. So please like, share, comment on this video. Okay, please share this video with your friends, family, business associates who are interested in the world of trading. This will help them. Okay, help others, help yourselves, help me as well grow this channel. Thank you so much.